Everyone, welcome back. So today we are going to talk about SOFI's price target. Now I know that there are a whole range of comments or debate about the price target. Some are saying that the price target or analyst price target are nothing but just their way of shorting the stock, their way of pumping the stock, their way of basically manipulating the stock. And then some are saying that, you know what, no, it makes sense. It's kind of, how the market runs. So we are going to look at some of the price target, and I happen to take a screenshot right before the earnings, what the price targets were, and then right after the earnings. There were a few other that changed in the next 2 to 3 days, but I have the screenshot from right after the earning, the next morning, when few of the analysts came out and they given their price target, or they gave their price target. Now, what I'm going to show you is basically will tell you exactly how the price target moves for a stock like SOFI, which is a growth stock. And also I'm going to share a chart and I will show you how the volume spiked as the price targets came out. So it's going to be very interesting on how these things correlate. So pay attention to the video and hope you like the video. And if you do, then hit the like button and also subscribe to the channel if you're new. So let me share the screen and let's go over this together. So this is the price target. Bank of America came out and they gave a $7 price target from the $12. And I kind of, pointed out that this guy or Mir Bhatia from Bank of America, he gave the price target before even the call was finished. The call was still undergoing and he came and gave his price target. So then after that, but right before when the call was going on, I actually took this screenshot. So if you pay attention, and I'm going to bring your attention to this. So we have about 8 buys total of 57.1% analysts are saying to buy. Hold is about 6 analysts. There are about 14 analysts covering the stock. And we have about 0 sells. So nobody is saying sell, 6 are saying hold, and 8 are saying buy. The 12-month price target, this was before the earnings, was 1382. And then the last price was 525 when the earnings came out. And then, of course, the return potential on this stock is 163.2% in the next 12 months as per the price target. So if you look at this number, this is a staggering number. And we have over here total return that this stock gave is negative 67.9%. So we know that stock has been hammered, of course, recently and from the last few months, and it has given negative 67.9%. But the return potential on this stock moving forward is 163.2%. These are all the analysts and their name and basically which company they belong to, and these are all their price targets. So if you see, we have some 20s, we have some 17s, we have 15, we have 14, we have 13, 12, 10, all the way, and then 22 as well, which is basically Rosenblatt Securities. Okay. Then after that, what happened is that this is 510. If you notice over here, some of them are all the way from the same day when the earnings were released or leaked. And then some of them are from April as well. There is one person who is still hasn't given the updated price target from February of 2022. So when earnings came out, right after the earnings, the next day, these are the price targets that were given. Clear enough? Yes. Okay. So buys are now 64.3. Basically, 9 analysts are saying to buy the stock. And over here, we see we have about 57.1. So just one more analyst over here that we had 8 analysts, and over here we have 9 analysts that came out and recommended the stock for buy. We have hold, of course, the one that we had over here is now reduced. It was a hold before, but now it's a buy given the current price. But look what happened here. The 12-month price target changed to 1154 from, I would say, 1382. And the return potential for next 12 months changed to 67% from 163.2%. Two things happened. The price was really down on the day of the earnings. And then over here, the price went up and it was trading at about 691. So of course, the difference in the price and also the lower price target reduced the return potential from 167 over here, or 163.2 to about 67%. And year to date, or I would say the return or the negative return reduced from negative 67.9 to negative 53.8. So the metrics improved. The return potential decreased and the price target went down, but overall metrics improved. That means there are more analysts that are saying this stock is a buy at these prices. Now, pay attention to this. This is 516, 511, 511, 511, all the way to 511 over here, and then they are still in 510. So we have about Piper Sandler that came out $10 price target, then Morgan Stanley, Goldman Sachs, they all have 7, 9, and 7 over here. And then they don't even mention the Mihir Bhatia or Bank of America over here because it's 14 sources. His name is not over here. So they're not counting this particular analyst. Of course, they're counting towards the 12-month price target, but they're not showing it over here. So now I'm going to share the chart with you all and kind of show you the chart of what happened right after on the 11th and although on the 16th when these price target came. It will help us clear a few things. Okay, so as you can see over here, this is a daily chart of SOFI. I'm gonna actually get rid of this over here so we can see it clearly. So this is a daily chart of SOFI right here. It's a one-day chart of SOFI, and it shows over here, it shows the RSI, it shows the MACD, and it shows the average volume right here, as you can see at the bottom. So when on 5/11, when all the analysts came out with their lower price target, see what happened. There is a lot of buying that happened in these 3 days. So if you pay attention over here, so while the price targets were coming out and they were freaking some of us out saying that, you know what, no, this is not good because they are now lowering the price targets. And some investors do get swayed when they look at the price targets. Of course, I mean, you know, if all of a sudden a big analyst and a big bank comes and give their price target, people will be a little worried about that, you know what, this is crazy because now they lowered the price target. I was thinking the stock is going to go to 15 to 20, and then now they're lowering the price target. So I'm going to go ahead and sell my position. So that's why you see a lot of selling that happened. Of course, market has a lot to do with it too. I'm not saying it's all just SOFI, but look, as soon as the lower price target came, there are a lot of folks that kind of bought the stock at this level right here. And if you see over here, this was 5/11, this was 5/12, this was 5/13, 14, 15, right here is 5/16 right here, as you can see. So majority of, as I showed you, majority of the price target updates came on 5/11. And then we had this selling that goes on as the retailers were selling out, the institutional investors and also the banks were buying. And then after that, look what happened. The price started to go up and it has stabilized. I mean, yesterday, Dow Jones was down 1,100 points. S&P lost almost 4%. It was a big red down day, but SOFI and few other fintechs held strong. And now I feel like as we go into Today, market is looking bad, pre-market. I'm recording this video at 6 a.m. in the morning, and Dow is almost down 400 points right now. So I really don't know how the market is going to turn, but I can tell you one thing for sure. These market conditions are not going to last for a long time. I recorded a video, or I released a video yesterday where I talked about S&P and what is the bottom, the maximum bottom we can see. And I could see S&P hit 3,500, 3,600. So it still has about the range to go through. I mean, let me just quickly share the chart. And this chart is actually very interesting. If by the way, this is Moomoo that I'm using. And if you like this, then the link are in the description, so definitely check it out. Okay, so this is what I'm looking at S&P. So if you pay attention over here, this is what I discussed in my video yesterday, that S&P is still above the 200-week moving average. This is a 200-week moving average right here, the red line. And as you can see, we had a lot of selling that happened yesterday. If you see that we had all these red candles, that means the S&P sold off big time. But look what's going on. The volume that we had back in 2020 crash, this is 3/16/2020, that volume is nowhere even close right now. So we still have a lot of range to cover if you really pay attention over here. So let's see if I can do this. So if I'm right here, and if I go to this right here, right around this time. So 35% less volume we have right now than what we had back in 2020, almost 36%. So you can see right here that we are 36 to 35% more volume we need, a red volume, to basically get to a point where we were back in 2020. And if you see to 2008 crisis, look at the volume surge. I mean, 2008, 2009, look over here. I mean, from that point onwards, we are at 24. I'm gonna just quickly draw the chart to kind of show you where we are right here. And if I draw the chart to like 24, where we are right now, we are talking close to about, I would say, 45%. So of course, we are not getting to that range. I don't think it's a 2008 like crisis, but we are definitely seeing the signs that this is not done yet. And this was supposed to be a separate video, but you know, why not just spell it out here, and see that we could see some more down pressure in the S&P going forward. Now, does that mean that SOFI is going to reach a all-time or all-time low? Nobody can answer that question. Nobody can tell that question. So in my opinion, we are going to see a lot of pricing, a lot of volume adjustment in many of the stocks. Some of them has beaten down, like SOFI, so much that another 5% or 10% is not going to matter. And if you have a long-term perspective on this company, again, my opinion only, and that's what I'm looking at, then buying at these prices is awesome. But again, if the S&P goes down another, say, 5 to 7 to 10%, then SOFI will be dragged down along with it. And I'm looking at how the volume on S&P changes over the next few weeks to decide that if I want to put all my money into the market now. I still have some money on the sidelines. I alerted my Discord member yesterday about some of the buys that I did. So if you would like that alert, just the link in the description, join our Patreon and Discord. And I just told them that, hey, this is what I'm buying because I want a DCA. And I said in my last video that I'm actually altering my DCA attitude. I wanted to buy 20 shares of Amazon actually yesterday, and I basically only bought 10 because I'm waiting for more pressure to buy 10 more. And then I bought another stock yesterday. So I'm altering these things to kind of make room for more and more upside potential. And I'm going to be releasing a deep down on S&P and where I see S&P at the end of the year. And that video is going to be really important and key for us to know about. And I'm not just sitting here and saying it. I'm reading a lot of articles. I'm doing a lot of research right now because I feel this is the time when you make generation wealth. These are the time which are very hard, and most of the things are already priced into the market. And that's what my belief is, that, you know, the recession we are talking about, the inflation we are talking about, consumers already know a lot about it because information is everywhere. And I want to take advantage of this because we are going to finish the year, in my opinion, very strong. And I'm going to do a deep dive on S&P and also some of my favorite stock that I'm looking at where I see them a huge return potential as we enter 2023 and also as we end 2023. So in the next 12 to 18 months, it's going to be a time to make generation wealth, in my opinion. I started in 2008. I'm seeing the same kind of signs in the market. Of course, not the exact, because that was the whole financial, sector collapse. But this is kind of different because this is all sectors are coming down except energy and few of the other sectors. But this market will turn, and we have to take advantage of basically estimating, guessing, predicting the deep bottom. Of course, nobody can time the market, but we can time our entries. I always say that. So hopefully you enjoyed the video. And if you did, then consider giving this video a like and also subscribing to our channel. And for more one-on-one conversation, consider joining our Discord and Patreon. Links are in the description below. And the charting app that you just saw is Moomoo. Take advantage of the link that I mentioned in the description. They're offering 5 free stock to open an account and deposit, I think, $100. So make sure you take advantage of that. And of course, this is the time to kind of build wealth into good companies and into the companies that you really believe in. Hope you liked today's video. Until next time, you all have a sparkling day.